This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, April 1st, 2015. Euro dollar. So the euro right now seems to be caught almost mid-range between recent lows, the 12-year low at 104.62, and a recent high at 110.53 that was set the other week. At this point, the downtrend does remain firmly intact, with the market looking for a lower top ahead of the next major downside extension. But at the same time, with weekly studies recently turning up from oversold, there is still risk that the market continues this correction with a higher low ahead of an upside extension beyond 110.53 and towards the 111 to 113 area. So right now, key levels to watch over the coming session on a short-term basis comes in by yesterday's high at 108.45 and yesterday's low, which comes in around 107.13. Sterling dollar. So cable is consolidating off of recent multi-year lows at 146.35, with the market still locked within a well-defined downtrend and looking for the next lower top ahead of a bearish continuation. At this point, there's been a recent high at 51.65 that's capped gains, and a break back above would compromise the immediate bearish outlook and open the door for more significant correction. However, inability to take out 51.65 followed by a break below 46.35 would open the next major downside extension in this market towards next key psychological barriers at 140. Ultimately, with cable, only a break back above 155.50, that lower top area that we had seen back on the 26th of February, would compromise the bearish outlook. Dollar yen. So dollar yen has been consolidating above 118 in recent trade, with the market still locked within a highly constructive outlook or highly constructive uptrend, and the market favored to break above the recent highs at 122.03 and towards the 125 to 130 area further up. At this point, any setbacks should continue to be well supported into the 118 area, while ultimately only back below 115.55, that December low, would compromise the highly constructive outlook. Euro Swiss. So Euro Swiss has been in a pullback mode over the past several days, although the market is finding some solid support ahead of some key previous support at 104.15. If the market can hold above 104.15 on a close basis, this will open the door for fresh upside, eventually above 108.15 and towards the 110-112 area further up. However, inability to hold above 104.15 followed by a break and close below this level would open a fresh downside extension, potentially back towards the parity level. Aussie dollar. So Aussie has come under pressure in recent trade after stalling out above 79. This is a market that is also locked within a broader underlying downtrend, and deeper setbacks are seen below 75.60, the recent low, and towards the next major psychological objective at 70 further down. At this point, any rally should continue to be very well capped ahead of 79, while only back above that recent high at 79.38 would compromise the bearish outlook. Dollar CAD. So dollar CAD has been content on consolidating over the past several days, with the market largely confined between 123.50 and 128. We did break just over 128 a few days back, trading up to fresh 5-year highs back on the 18th of March at 128.35. But the market is still comfortable trading in this broader range before considering the next major upside extension within this bullish trend. A break above 128.35 would open the door for a move towards the 2009 peak at 130.65 further up. At this point, setbacks should continue to be very well supported, with only a break back below 123.50 to compromise the immediate bullish outlook. Kiwi dollar. So Kiwi has been consolidating in recent trade after recently stalling out above 76, and the market is now looking for a fresh downside extension below the recent 71.76 lows and towards the next key psychological barriers at 65 further down. At this point, only really a break back above 78.90 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to show signs of a potential major top, with the market stalling ahead of 2120, that record high that we saw in February, and trading back down towards critical support at 2040. A daily close below 2040 would do a good job of strengthening a topish and bearish outlook and accelerate declines below 2040 and towards the 2000 and 1960 to 1980 area further down. Gold. So gold has made an impressive recovery in recent trade after stalling just shy of the 2014 base going back to mid-March, and this recovery has extended towards 1223, but just shy of 1223 thus far. A break above 1223, that's the high that we saw back on the 2nd of March, would be required to really strengthen this basing outlook and open the door for more significant gains. However, inability to take out 1223 will keep the immediate pressure on the downside, with a lower top potentially sought out ahead of a retest of that 2014 low. For now, the key levels to pay attention to over the coming sessions are the recent low that we saw down at 1178 and that recent high that we saw going back to last week that comes in at 1219, 1220, and of course that 1223 high, that critical high from the 2nd of March. That's all for now.